Hey, what's going on YouTube? It's your boy TriniFX here, back with another daily recap video for you guys. So today is Tuesday the 16th, 2026, and let's start off on a daily chart. We have to just look at the higher time frame, seeing that we are nearing all-time highs. Initially, one would have expected price to immediately continue bullish with the bullish momentum, taking out all-time highs, but we gotta play it on a day by day basis, right? Monday ended off on a high, leaving behind this daily fair value gap. So, what I was looking for is two scenarios. Either Tuesday's trading will take out the high and continue, or price would give us a retracement, maybe into this bearish fair value gap to use as an inversion to take price higher, or maybe to trade down into here and wait for NFP. So let's just go down the time frames and see what we can see. All right, so 4 hour basically consolidating. Let's go into the 1 hour time frame. Right, so we ended Thursday here. We could see as Asia opened, yes, there was this 1 hour bullish fair value gap, but price just continued to consolidate in Asia, and this looked like an accumulation to me. So I was really interested to see, what London would have done, and we could have seen Asia accumulated, London rallied, took out yesterday's high, and as we drop down into a 15-minute time frame, what I saw, definitely this looked like accumulation, manipulation, and then we would have awaited the distribution, which, yes, eventually we saw it play out. So how could we have framed a trade today? So stepping to the market, 9:15, 9:20, I saw this accumulation phase. London rallied. London did take out yesterday's high. The market retraced a bit, and then right before New York open, from about 6 o'clock, we saw the market just rally ever so slightly, but you can see the size of the candles, they weren't very big, and then the market displaced below this. So when I saw this displacement, that confirmed to me that price may be bearish for the day, because the way I look at the market, I look for where did price open. Midnight open is here, price rallied, so I looked at this as accumulation. This leg was the manipulation. I'm awaiting the distribution. So I marked out any gaps above or below price, and currently we had this 15-minute fair value gap above price. So as market opened, I was really waiting for it to run higher. But as the market opened, market dipped down, took out Asia. So that got me thinking. So I dropped to a 1 minute time frame to see exactly what was price about to do there. And let's just scrub across here to see what we saw. So on market open, it opened here 9:30. Price dipped below, took out London and the Asia, and then started to rally. So at this point, I'm thinking, okay, can I take a trade up to this 15-minute fair value gap and then ride price lower, or should I just wait? Now, guys, nobody's perfect. So when I saw this initial very tiny fair value gap here, I consider this as my first presented fair value gap. If you know ICT concepts, you know that first fair value gap that presents itself as soon as market open is very significant. So when price dipped down into that first presented fair value gap, full transparency, I did take a long as price was trading above the bearish candle. I took a long, got into some drawdown because I had my stop right below the candle bodies. And as soon as price traded back up here, I did move my stop to break even, anticipating a quick run into this 15-minute fair value gap. We did not receive that. When I show you my screenshot of the trades, you will see I got stopped out here. So then I waited. I waited to see what price was going to do, if it would have just rolled over or traded higher. Keeping in mind we still had this untapped 15-minute bearish fair value gap. So when price traded into it once, it rallied again and it took out that high and displaced. A couple years ago, I would have taken a trade immediately, but I was waiting for some confirmation here. So price traded down, traded back up. I did take a short here, got stopped out because I moved my entry to break even fairly quickly. Right, so you'll see another execution here, which I got stopped. When I saw price deliver this candle here, if we go to a 5-minute time frame, we could also look at fair value gap on the 5-minute chart. Let me just mark that off here. Right, so after it tapped in, price delivered. So price traded away aggressively. It hit it once, hit it twice on the 5-minute, 3 times. 3 Indian patterns if you know ICT, and then price displaced lower, leaving behind this 5-minute fair value gap. So I marked out my 5-minute fair value gap, still monitoring price. Didn't take any other trade just yet. I dropped back into my 1-minute chart, and what did I see? So after price rallied, hit this 5-minute fair value gap, we had a bullish fair value gap here on the 1-minute chart. Price broke below, but I really wanted to see price break below this first presented fair value gap, because the way I look at the market, I look for a shift in market structure, and for me this would have been my shift in market structure here. As soon as price broke below this candle's low, that would have been my shift in market structure. If it traded down into this 1-minute fair value gap here, traded above, took out this high, then I would have treated this as the intermediate term low. Price didn't do that, so I treated this as my intermediate term low. So after price traded, closed below this candle and this candle, also the first presented fair value gap, when price was trading back up, I took my entry here, leaving room for price to trade back into this later formed 1-minute fair value gap and then displaced. So this was my entry here. I did place my stop above this candle that traded into this 1-minute bearish fair value gap that caused price to displace. I put my stop above there, took my entry, and I was trailing my stop, and I got out just for a little over a 1-to-4 risk to reward ratio. As we can see, price just went lower for the rest of the day. Yes, one could say, I could have held price, but I took my piece of the pie and I got out. So this was the trade execution for the day. Let me just pull it up on screen here. These were the two. This was the break even. This was the other break even trade, and this would have been the last trade execution. As price broke below this first presented fair value gap, trading back up, I took my entry. As price traded up into this candle, I took my entry and I got out. As we saw here, this was the execution. I netted for about 59, 61 points around there, and that was good enough for me. This was the 15-minute fair value gap as price traded into. This was the 5-minute fair value gap that price also traded into and displaced. So, in hindsight, we could always see the price very clear. This was the entry here. Should have held it. Was too quick to move my stop to break even here. But that's how real trading goes. Sometimes we take wins, we take break-evens, and we take a couple losses. Thank God for me, this ended off as a win on the day. And if we go back up to the 15-minute time frame here, we could see that price ultimately traded below this 4-hour fair value gap, um, and just continue to go. So tomorrow it'll be interesting to see how they set price up the day before NFP. Um, as I said before, I'm not sure I'll be trading tomorrow or Thursday, and Friday is a bank holiday. So guys, if you found value, and you're on your own trading journey and want to see the real side of becoming consistent, consider subscribing. We're documenting everything right here on the channel. And I appreciate if you could share the video, like, and I'll talk to you guys again another day. Stay safe. Bye bye.